and welcome to Big Deal. I'm Nisha Poddar, and today on this episode we have a special guest with us. An ace investment banker and CEO of Moelis India is Manisha Girotra, who's right here in our studios with us. Manisha, so good to have you on the show. And of course,
thank you for having me.
Thank you. So 25 years in investment banking and you're still excited about the deals. What gets you going?
So look, I think, each one of us must find what we are passionate about, much like what you found, in your career. And I think that's what drives me. I love what I do. My father's a banker. My husband's a banker. My brother is in private equity. So we're like a family of bankers. We're a rather boring family, but this is what we like doing. So when my daughter says she wants to run a nail spa, I'm delighted. Any de-risking of business is good. But yeah, so I think, this is what I love doing. It's passionate. I get excited every morning. I like making a difference in companies and, what we do. So it excites me. And so far, so good.
Your strongest point, your forte would be the strong relationships that you have built over the years.
Yeah, and I think this job basically requires a never give up, never say die attitude. And I think I have that. I can keep going, and I don't get defeats and failures don't sort of make me go down. So I think that's what I would think is my biggest strength.
All right. Now let's talk about the Deal Street. Of course, the biggest event that has really happened in India is the demonetization drive by the government. How is Deal Street taking it? What are you hearing from corporates as well as foreign investors?
Sure, I think there are two reactions. One is what you're seeing through the capital markets, which is an extreme reaction where markets are sort of overreacting. And that's probably also a multitude of events such as Trump, Brexit, etc. So we've been sort of seeing markets soft, and this sort of added to that. So if you leave the markets aside for a bit and you look at the long-term investors, who I talk to much more on the M&A side, they're very positive. They see this government, this leader, the reforms he's undertaking ever since he's come into power, whether it's GST, whether it's on the Income Tax Act, all these reforms as just a way of cleaning up India.
Yes.
You recall we are on the ease of doing business, we are like an all-time low. Even now I think we are 137. On the transparency index we've gone up from 97 to 75, still very low. So I think that's what the foreign investors, especially the long-term investors, say that this is a time that this government's cleaning up, and they see it as very positive. So that part of the world remains very positive. In fact, we had quick conversations with our clients thinking we'd have to give a defensive explanation, and they all said, look, this is great.
So while the cleanup operation is going on, is it also more wait and watch on the Deal Street? Do you think that the valuations also get impacted, especially in the financial services space?
So I don't think it's wait and watch at all. The M&A dialogue continues just the same. M&A, as you know, especially is more long-term capital coming in, whether it's through private equity or strategic investors. So that's not sort of halted at all. Any of the transactions that our firm is currently working on, the dialogue continues just as it was. It has been, as I said, a little bit of explanation around this, and we've moved on. It's really the capital markets where some of the sectors have corrected, and that's been more on the consumer side, the financial services side. Financial services, if you recall, the activity on the strategic side is low, because the regulations don't allow it, and the consolidation sort of slow. Insurance has now started, so you'll sort of see some consolidation. So financial services and consumers, etc., may get impacted through the capital markets in the short term, but long term, I think conversations continue just the same way.
So how long is the long term that you're looking at?
So when you have a strategic investor come in, he's sort of looking at a 10-15-year horizon, right? He's not looking at coming in for a quarter. It's not a quarter-on-quarter report that he needs to give back to his board. So if it's a long-term investment that he's looking to make in India, he's not worried. As I said, he sees all of this as a huge positive in terms of doing business in India, and lesser influence of bureaucracy, etc., etc. So all of that is seen as a big positive by a strategic investor, which is really what India needs.
But do you also think that over the next 2 quarters, when things unravel over the earnings of these FMCG companies and NBFCs, we will know where things are headed from there on? Or are we clear about things?
Sure. I think at the moment, it's a bit of a knee-jerk reaction. We're all sort of making these big, anticipations on how much GDP will get affected, what the stock market will get affected, how the rupee will go. I think it's very early stage. Next 6 months, we need to wait and watch. Some of the FMCG consumer healthcare-related stocks have probably just gone up too far ahead, right? I mean, they'd run up a lot. It was a bull market rally which was just in a few sectors. I think that will get corrected. Some of it will come back in the industrial sector, metals, mining, commodities, which is not a bad thing, right? I mean, why should the rally just be in 3 sectors? So become probably more broad-based, and that's a positive. GDP impact, etc. I think too early. And don't forget, the government also has other levers in their hand, right? I mean, this December 4th interest rate. So let's see what happens. Budgets coming up, and it's actually a sky full of stars in terms of just where our economy is currently. So there's a lot of levers they can pull. They're not constrained. So let's just wait and watch for the next 6 months. I think it's too early stage, and it's too much of an overreaction at this point.
All right. So, yeah, we will wait and see how things do pan out. But in terms of the impact, how do you see the banking sector currently? Because you've also worked on some debt-laden deals. And in fact, that has been the theme over the last couple of years also. Most of the large transactions have happened in this space. You did GMR Tenaga deal. Now, do you think the pressure is going to lift from the banks as far as their balance sheet concerns are concerned? Because we are seeing like about 2 lakh crore rupees of deposits coming in State Bank of India alone. So how is this expected to pan out? Are you getting more queries on the debt-laden companies, and is that a deal space that you are still considering as a theme to go?
Sure. So just going to the banks first, I think, it's a big positive for the bank. CASA ratios should go up. People are putting more money into banks. So all of that should definitely help. NIs should expand. So banking sector, I'm positive on. I think a lot of the trade moved away from banking into NBFCs. Too quickly, too irrationally in the last 1 year. I think you'll see some of that come back. So banks should be in a healthier position. Will the drive to recover NPAs go slower? I don't think so. I think the political will is so strong. We've seen the kind of restructurings that have happened with the largest of groups in India in the last 12 months. And I don't think that pressure is going to go away. And with the new bankruptcy law, etc., I think it should only make it easier. So I don't see it going away. And the problem is not so small that, one demonetization it definitely helps. But, it's a large acute problem for India. And I think India is aware, and banking sector is aware that this is a priority.
Yeah, and on the other hand, even GDP growth, which may slow down slightly because of consumption pattern going down, that could be a bigger worry, because that debt-laden companies may not be able to recover as soon. I mean, that could be another part of the worry.
Of course.
Apart from the strengthening of balance sheet. So what will offset what?
I think what will really get affected is more discretionary spending, etc. I think stable spending, etc. continues. It's really those sectors which need to worry. Is there a lot of NPAs there? No. I mean, it's more sectors like maybe jewelry may get affected, but auto, etc. were good sectors, right? So I wouldn't be so worried, but I wouldn't discount what you said.
And what about the bankruptcy code? That is expected to come very soon. How is that expected to impact this particular space?
So I think really it should have a very good positive impact. I think the more you can empower the lenders against the borrower in an environment which was so skewed towards borrowers till last year, the more it helps. There were just too many multiple frameworks, multiple institutions which a borrower who was not honest could use to his advantage. I think this empowers the lenders, which is very important. Globally, lenders are empowered to recover. Professionals come in, there's an independent regulator. All of that is what is envisaged. Now, of course, we have to ensure that's implemented properly, the infrastructure is put into place. But if all of that is done well, I think this will really empower our state-owned banks who just get bogged down too much in the bureaucracy and the multiple decision-making.
So investment bankers like yourself do have a list of companies where they could not enter, but with bankruptcy code, there could be deals possible.
Why investment bankers? Investors, right? I mean, if you saw special situation funds, etc., shied away from India. Today, they're actually setting up offices here. They're having conversations because they feel far more comfortable. 10 years ago, if I tried to speak to any of these global clients of ours, they didn't want to have a conversation. They didn't believe it when I said that, you can come in, take control of a company, restructure the debt, etc. They were like, no, your systems are too multiple. So I think all of that's changing.
And what about the private equity space? You've done quite a few deals. You've worked with Advent and everybody. Now, of course, market was overheated about a couple of months back. At that time, private equity action had slowed down. Now, markets on a knee-jerk reaction. Then again, private equity deals cannot happen. What is the mindset there? And do you see many private equity deals coming in the near future?
So private equities continue to invest in the last 2 years. Last year, I think India had about $30 billion of FDI coming, of which $18 billion was from private equity. Last year, private equity, as you rightly said, was far more active than this year. This year, I think you've already seen about $7 billion. So private equity remains committed to India. I think what you and I were discussing earlier, that actually being able to do control deals, which never happened before, which is really a testament of the fact that you're getting more comfortable around doing open offers, etc. They're going away just from pharma and tech sectors to wider sectors. You're seeing, some private equity even competing for these debt restructuring opportunities. So all of that's a positive. And the good thing is that it's not just the small base of 8 to 10 private equity investors that you and I talked about till a year ago. There's a lot of broad basing. The CDPQs, the CPPs have come in. They've set up offices. Middle East, we did this deal for, as you said, for Advent. Abraj came in. Middle East took a controlling stake in India, which never happened. China, Fosun land happened. So, the alternate pools of capital, alternate private equity coming in is a good thing, because, you're just not concentrated on the 8 to 10 investors.
Yes. A lot more investors have really come into the country. In the last couple of years, we've seen Brookfield, we had never heard of, is making huge investments. CPPI, all the Canadian funds.
Brookfield just buying the tower assets of Reliance. They bought land. GIC GIC, Blackstone making huge investments in real estate. All of the commercial real estate, Blackstone and GIC are so big, and you'll see it through the REITs that they do now, right? So that's nice because, you know, it's de-risking. What's very good in the last few years is that I remember when I started my career, there were just 5 or 7 investors that you went to. It's not the case anymore. You know, there are specialized investors, special situation funds, etc., which are coming in, and that's nice because that's how, you know, you will be able to get more investments in, because, you know, there are specialized funds for specialized sectors and situations.
Real estate was beginning to see a glimmer of hope with REITs and everything getting sorted as well. Now, how do you see it after demonetization? That's one sector expected to be affected.
Sure. I mean, as somebody this morning in my office said, real estate equals real pain. So I think that's something. I think that's something that surely will be challenging. Again, I think like most other sectors, Nisha, it'll be better for the companies in the bigger companies in the organized sector. The ones that will suffer are in tier 2 cities, those who have large land banks, those who really held on and not sold for a long time. I think that's where the pain will happen. And this is a theme you'll see across all sectors, steel, cement, etc. Basically, companies in the organized sector, large companies, will benefit disproportionately going forward, which is not a bad thing because, you know, more of the economy comes into the digital sector, and that sort of helps the country. So short-term pain definitely for this sector. And I think what they'll have to do is they'll have to be forced to sell land. They'll be forced to sell houses to people like you and me, and, you know, that's not a bad thing.
At a lower price.
At a lower price.
We could be the beneficiaries.
We could be the beneficiaries.
All right, hold your thoughts there. You spoke a lot about consolidation. We have to still discuss the trends and specific sectors which are going to be active on the Teal Street. So we will take it after a very short break. Manisha Girotra is right here, so stay tuned to Big Deal.